This is about to become my perfect entry ever. Everything on this chart still looks bullish, and that's exactly why most traders are about to get trapped. There's a very specific reason price is moving into this area, and once the market completes its setup, the move that follows won't be normal. Watch carefully what happens next. Now focus on this supply zone carefully. Price is not reacting here randomly. Even though the market still looks bullish, momentum is slowly weakening as price moves deeper into this area. This is where most traders start looking for breakout continuation. But smart money usually operates differently near premium pricing. Now this is where the manipulation becomes interesting. First, the market creates a major inducement level that keeps giving buyers confidence. Then inside that structure, price forms a smaller inducement to attract even more breakout traders. At this point, most traders believe the market is preparing for continuation. But smart money is using that confidence very differently. Now look below the market. Sell-side liquidity is resting here, and that liquidity becomes extremely important once buyers start getting trapped near the highs. The moment order flow shifts, this area can quickly become the market's main target. And this is where the setup finally confirms. Price reacts from the supply zone, fails to continue higher, and then delivers strong, bearish displacement. That shift changes the entire narrative. This is the entry I was waiting for, from supply directly toward the SSL below. And this is exactly why I call this my perfect entry ever. The moment price rejected from supply, the entire market structure started changing underneath the surface. Most traders still believed the breakout was valid. They were looking at the bullish structure, expecting continuation toward the highs. But smart money was already positioned differently. The inducement above gave buyers confidence, and the liquidity resting below the market gave institutions a clear target. Then came the displacement. That single move trapped breakout buyers at the top and shifted order flow completely bearish. Now think about what happens next. As price starts dropping, stop losses begin triggering, late buyers panic and exit, and new sellers enter after seeing the structure break. That creates layered sell pressure all at once, which is why price didn't slowly decline. It expanded aggressively, with almost no pullback. This wasn't just a clean entry. This was liquidity engineering, manipulation, and displacement, aligning together perfectly. If you enjoyed this complete breakdown, make sure to follow Discount Trader for more institutional price action analysis. The biggest mistake traders make is focusing only on candles, while smart money focuses on liquidity, inducement, and positioning. Once you start understanding that difference, the market begins to look completely different.